Hi, this is Dave Aquino with Microquant, and this is the free video for Tuesday, April 7th, 2015. I'm looking at Apple here, and we have a couple of different directions I'd like to talk about. Now, Apple is a trading room favorite. A lot of our traders love trading Apple, and Apple's been really good to us in the past. What's interesting right now is the lack of direction in Apple. And I want to give you guys some general reflections on Apple and how to trade it if we do get a breakout in either direction. First of all, you have this low point back here on January 6th, right around 104.5. The high came in on February 24th at 133.60. So that right there is about a 30-point difference in price. Now, basically, since the release and pending release of the iWatch, we've fallen back, touched the 50-day EMA, bounced, fallen back, touched the 50-day again, bounced, fell back, touched the 50-day EMA. Now, that is not overly bullish because we keep getting lower highs, all right? And yesterday, we actually broke above that swing high. So in and of itself, this is a bullish move. Now, you can see momentum drifting lower, and becoming weaker and weaker, even on this move higher yesterday. Now, what's interesting is the fact that Apple is actually negative today. The NASDAQ itself is up almost 0.4%. Apple is down 0.5%. So it is down in a generally positive market. That is not a very strong indication of a breakout higher. Now, at this point, the breakout level to the upside really needs to be this swing high at 129.25. A break above that will carry us to the all-time high. Now, on the downside, Apple has the potential to break and roll over, especially if the market falls back also. Now, you can see that the 50-day EMA provided support 3 times in the past and should be able to provide some support if it comes back down to test it. Now, if we break below the 50-day and close below the 50-day, you're going to fall into this 120, 119 level. Okay, so that is roughly $6 to $7 to the downside. At this point, because momentum is not giving us any indication that the breakout seems to be weakening here, we look to still stay contained between 130 and 123. Okay, the one thing that's nice about that is the fact that we can bounce back and forth. It gives us very good credit spread trading levels, as well as some general direction if the general market breaks higher or lower, provided Apple goes along with it. The one thing to watch is for a disappointment when the first weekend of sales come out with the Apple Watch. Personally, I don't think they're going to be spectacular, and I think that the market may react negatively to that. So that may be, if that's my thinking, be careful because Apple may actually run lower prior to that time. So keep those things in mind. Again, there's Apple at this point can move in 2 different directions. I've given you good clues to watch for a breakout either higher or lower or generally staying within this central range.